Chapter 13: Financial Tracking, Reporting, and Owner Statements. Welcome to Chapter 13 of the Guide to Short-Term Rental Management. In our previous chapter, we focused on the strategic distribution of your listings across multiple platforms. Now, we turn our attention to a critical back-office function that underpins the trust and transparency essential in your relationships with property owners: financial tracking, reporting, and owner statements. Meticulous financial management is not just about good bookkeeping. It is about demonstrating accountability, providing clarity on performance, and ensuring that owners have complete confidence in how their valuable assets and the revenue they generate are being handled. This chapter will cover the key aspects from collecting payments and managing expenses to delivering professional owner reports and maintaining clean financial records. Collecting payments and managing refunds. Efficiently and securely collecting payments from guests and effectively managing refunds when necessary are fundamental aspects of the financial workflow in short-term rental management. Your processes here need to be robust, compliant, and clear to both guests and owners. There are several common payment collection methods depending on the booking source. For bookings that come through online travel agencies like Airbnb, Vrbo, or Booking.com, the platform itself typically handles the processing of guest payments. They collect the funds from the guest and then remit the payout to you, or directly to the owner, depending on your setup, usually net of their service fees or commissions. It is important to understand the specific payout schedules and processes for each online travel agency you use, as they can vary. For direct bookings that you generate through your own website or other direct channels, you will need to have your own payment processing capabilities. This typically involves setting up a merchant account and integrating a payment gateway, such as Stripe or PayPal, with your booking engine or property management system. When handling credit card payments directly, it is important to ensure you are payment card industry compliant to protect sensitive guest cardholder data and avoid penalties for breaches. Many property management system platforms offer integrated payment processing that is designed to be payment card industry compliant, simplifying this for you. The collection and handling of security deposits also require careful consideration. For online travel agency bookings, the platform often manages the security deposit process according to their own policies. For direct bookings, you will need to decide on your method, whether it is an authorization hold placed on a guest's credit card or an actual charge that is then refunded after a satisfactory post-stay inspection. You must be fully aware of and compliant with any local or state regulations regarding the handling, withholding, and timely return of security deposits. Managing refunds is another key area. Your ability to issue refunds will primarily be governed by your stated cancellation policies, which should be clearly communicated to guests at the time of booking. These policies will differ depending on whether the booking came through an online travel agency, which has its own selectable policy framework, or your direct channel, where you define the terms. When a cancellation occurs that qualifies for a refund, you need a clear process for processing that refund promptly, whether it is initiated through the online travel agency's system or via your payment gateway for direct bookings. Timeliness in issuing legitimate refunds is important for guest satisfaction and maintaining a good reputation. Occasionally, you might find yourself in situations requiring discretionary refunds or compensations. Offering a partial refund, for example, due to a significant guest complaint or an unexpected issue with the property during their stay, even if it falls outside your standard cancellation policy. All such discretionary refunds should be carefully documented, with clear reasons and owner approval if it impacts their net revenue. Finally, be prepared to handle chargebacks, which occur when a guest disputes a charge with their credit card company. Responding effectively to chargebacks requires thorough documentation, including the guest agreement, communication records, and any evidence related to the stay or the dispute. Handling cleaning and maintenance expenses. Accurately handling cleaning and maintenance expenses for each property is vital for transparent owner reporting and ensuring your business correctly accounts for all operational costs. Meticulous tracking and allocation of these costs are key. Let us first consider cleaning expenses. You need a system for tracking payments to your cleaners. whether you pay them a fixed fee per clean or an hourly rate. If you use cleaning contractors, you will be processing their invoices. If you have in-house cleaning staff, these costs will be part of your payroll. The cost of cleaning supplies also needs to be accounted for. You might purchase supplies in bulk and allocate the cost across properties, or purchase supplies specific to each property. An important aspect is clarity on how these cleaning expenses are billed to the owner or guest. Is the cleaning fee a separate charge paid by the guest that is then passed through to cover the cleaning cost? Is it a cost absorbed by the property owner from the gross rental revenue? Or in some management models, is the cost of standard cleaning covered within your management commission? This must be detailed in your management agreement with the owner. In the same way, maintenance expenses require careful tracking and documentation. This involves collecting and verifying all vendor invoices from plumbers, electricians, handymen, and any other contractors who perform work on the properties. You also need to track the costs for any materials purchased for repairs. Most management agreements will specify pre-approved spending limits for repairs that you, as the property manager, can authorize without needing prior specific approval from the owner for each instance. For expenses exceeding this limit, a clear approval process should be in place. Comprehensive documentation for all maintenance work is crucial. This should include photos of any damage before the repair and photos of the completed work where appropriate, alongside detailed invoices outlining the work done and the costs involved. Using your property management system or dedicated accounting software is essential for efficiently logging all these cleaning and maintenance expenses against the specific properties to which they pertain. This ensures that these costs are correctly allocated and can be accurately reflected in owner statements and your overall financial records. Owner reports. Transparency and professionalism. Delivering clear, accurate, and professional owner reports is fundamental to maintaining transparency and professionalism in your relationship with property owners. These reports are the primary vehicle through which you communicate the financial performance of their property and demonstrate your accountability as their manager. They are a cornerstone of building and maintaining owner trust. A professional owner report should contain several key elements to provide a comprehensive overview. It must clearly state the reporting period it covers. The report should begin with the gross rental income, offering a detailed breakdown of all bookings that occurred during the period, ideally showing individual booking dates and the revenue generated by each. Following this, there needs to be a clear and itemized list of all deductions. This will include your management commission, showing the agreed-upon rate and how it was calculated from the gross revenue. It will also include all cleaning fees or costs associated with turnovers during the period and all maintenance expenses incurred, ideally with references to supporting invoices or documentation, especially for larger items. Any supply costs that are billed to the owner or any other agreed-upon operational charges should also be itemized. The report culminates in showing the net income or payout amount due to the owner. Beyond the core financial figures, high-quality owner reports often include valuable occupancy data, such as the number of nights booked during the period and the resulting occupancy rate. Some managers also include a summary of upcoming bookings to give owners a forward look at performance, and a brief summary of any significant maintenance activities that occurred can also be helpful. The frequency of these reports is typically monthly, aligning with monthly owner payouts. The format and delivery should exude professionalism. Reports are commonly generated as PDF documents and delivered to owners via email, or increasingly, made accessible 24/7 through a secure owner portal provided by your property management system. Regardless of the delivery method, accuracy and timeliness in providing these reports are paramount. Finally, part of professionalism is being readily available to answer any questions that owners may have about their reports, explaining any items clearly and patiently. This open communication reinforces the transparency you aim to achieve. Reimbursables, markups, and pass-through charges. In the course of managing properties, you will inevitably incur various costs. Understanding how these are categorized and communicated to owners is important, particularly when it comes to reimbursables, markups, and pass-through charges. Reimbursables are essentially costs that you, the property manager, incur on behalf of the property owner, which are then reimbursed to you by the owner. Common examples include the direct cost of a specific repair that you paid for upfront, or the cost of purchasing specific supplies that the owner requested for their property. These are typically reimbursed to you at their actual cost without any additional fee added. Pass-through charges are very similar to reimbursables. These are direct costs associated with the property that you might pay initially and then pass directly through to the owner for reimbursement, typically without any markup. Examples could include the actual cost of utility bills if your management agreement states you will pay these first and then bill the owner, or specific permit fees that you paid on the owner's behalf. Markups, however, are different. A markup is an additional percentage or a fixed fee that your property management company adds to the cost of a service or item that you coordinate or provide. For instance, if you hire a contractor to perform a repair for $100, you might bill the owner $115 for that service. The $15 difference represents your markup, which compensates you for the time, effort, and expertise involved in vetting the contractor, scheduling the work, overseeing its completion, and handling the payment. An essential consideration when dealing with markups, and indeed with all charges, is transparency and full disclosure. Your management agreement must clearly state if and when markups will be applied to any services or expenses, and it must specify the exact percentage or amount of that markup. Property owners must be made aware of and explicitly agree to any markup policies up front before signing the agreement. When markups are applied, your owner statements should identify or explain these charges. Hidden markups, or applying markups without prior agreement, are a surefire way to destroy trust and can even lead to legal disputes. There are important ethical considerations here. While markups can be a legitimate revenue stream for property managers to compensate for the value they add in coordinating third-party services, they must always be fair, reasonable, and transparently communicated. As a best practice, always be prepared to provide copies of original vendor invoices for any reimbursable or pass-through charges to demonstrate the actual costs incurred. If you are applying a markup for coordination services, state your fee for that coordination rather than simply inflating the underlying cost without explanation. Honesty and clarity in all financial dealings are paramount. Tools and best practices for clean books. Maintaining clean books is essential for the financial health and integrity of your property management business. This term refers to having accurate, up-to-date, and well-organized financial records that provide a clear and comprehensive picture of your business's financial activities and performance. Clean books are necessary for effective day-to-day financial management, for accurate tax preparation, for providing transparent and reliable owner reporting, and for making sound strategic business decisions. Several tools are indispensable for achieving and maintaining clean books. As discussed extensively, a robust property management system with integrated financial modules is a cornerstone. It helps track bookings, income, and property-specific expenses, and is vital for generating accurate owner statements. However, for the overall accounting of your property management company itself, your business's profit and loss, balance sheet, cash flow, and so on, you will almost certainly need dedicated accounting software, such as QuickBooks, Xero, or Wave. These systems are designed for comprehensive business accounting. Proper banking setup is also fundamental. You must have a separate business bank account for your property management company to keep your business finances distinct from your personal finances. Furthermore, if you handle owner funds, like rental income before it is dispersed, or guest security deposits, you may be legally required in your jurisdiction to hold these funds in separate trust accounts. This is a necessary practice to prevent the mixing of funds and to comply with trust accounting regulations, which are often very strict. To manage the inflow of expense documentation, receipt management tools like Expensify or Dext, formerly Receipt Bank, can be helpful for digitizing, categorizing, and organizing receipts for business expenses. While spreadsheets might be used for some supplementary tracking or by very small operations just starting out, they are generally not ideal as a primary system for maintaining clean books due to their proneness to errors and lack of robust accounting features. Beyond the tools, adhering to several best practices is key. Regular reconciliation of all your bank accounts, credit card statements, and the financial data in your property management system with your accounting software should be performed diligently, ideally on a monthly basis. Ensure accurate categorization of all income and expenses within your accounting system, as this is necessary for meaningful financial reporting and tax preparation. As mentioned, maintain a strict separation of your business and personal finances. It is vital to maintain a clear audit trail by keeping all supporting documentation for your financial records, including all invoices, receipts, bank statements, signed contracts, and correspondence related to financial transactions. If you are holding client funds, you must thoroughly understand and comply with all trust accounting rules applicable in your jurisdiction. This is a highly regulated area with penalties for non-compliance. Many property managers find it invaluable to work with a professional, such as a bookkeeper or an accountant who is familiar with property management or the specific nuances of the short-term rental industry. Finally, as the business owner, you should conduct regular financial reviews of your own company's performance, not just focus on preparing owner statements. Understanding your own business's financial health is key for its long-term success. This brings Chapter 13 to a close. We have covered the essential elements of financial tracking, reporting to owners with transparency and professionalism, and the best practices for maintaining clean and accurate financial records for your management business. In Chapter 14, we will shift our focus to another important resource: building and managing your team.